In this episode, I sit down with Kyle Sorel,
I've never been a guy that goes out in markets and finds new clients all the time.
co-founder and managing partner of Titn Development. This year alone, they're pacing to do $50 million worth in transactions, some of these being beautiful $10 million spec homes. They're a vertically integrated, hyper-focused real estate developer local in Fort Lauderdale, and they are a walking example of what it means to find an edge in your industry. I hope you enjoy the show. I'm your host, Shaun Sharabi, and today we have another fantastic guest. He is a friend of mine that I met, of course, on the pickleball courts, and he's the founder and managing partner of Titn Development. Kyle Sorel, everyone. Kyle, welcome, man.
Thank you. Thanks for having me.
Yeah, man. Okay, in this show, we're not going to be spending much time talking about the background of our impressive guest, but before we dive in, let me take a moment to highlight Kyle's journey. His career in real estate and business has been truly exciting to learn about, so hopefully I'll be able to do it some justice. He went to Florida State University, got his degree in real estate in 2008, great timing. And from 2011 to 2014, Kyle was at a company called Florida Medical Space where he sort of really cut his teeth in real estate sales, as I understand it. For the next 9 years, he honed in on his experience as a specialized broker in South Florida and sort of accumulated to the main thing now of Titn Development. So in 2019, he started Titn Development, which is a custom home and commercial property full development company. They focus on, as I read, providing honest and high quality services to their clients, investors, and partners with a focus on positive attitude, maintaining accessibility, and providing cost-effective solutions that create significant value. These custom homes are beautiful. I've seen many of them, generally ranging from $1 to $10 million, and they have expertise as a general contractor in really all elements of real estate to kind of bring these really incredible projects to life. Titn is just over 5 years old, and they're aiming to sell nearly $50 million worth of their own products this year, which is epic. And Kyle is married with 2 kids, aged 4 and 8, and is a dedicated father and, of course, an entrepreneur. Maybe just start us off with, like, how did your early experiences in leasing and the investment sales sort of shape the way that you approach projects today?
Yeah, so as you said, when I got out of school, it was kind of the downturn. So it was right after my parents made that sale that was important to our family financial life. I got out of school, things were kind of curling over, if you will, in the real estate market. And prior to the Florida Medical Space job, I was doing some kind of investment sales, wholesaling, putting properties under contract, flipping them. That was kind of a vibrant business at that time because there was a lot of property you could pick up for pennies on the dollar at that point. So that was kind of just a year, jumping into the real estate business, and then eventually started at Florida Medical Space, which again was a commercial real estate broker. I knew very little getting into it, picked it up quickly, and it was, basically working with healthcare operators, multi-location medical practices, helping them, find new locations. The fun part of the business that I didn't get that much involved in was outpatient surgical centers, and kind of there was a development arm to that business that I didn't really get to touch. And after about a couple of years, I wanted, the typical things like a better split and this and that, but really I was kind of squared into this like niche healthcare only concept. And around me, there were friends, family, people that I knew, contacts that were, whether it be buying homes or just wanting to do commercial real estate that was outside of the healthcare realm. So I ended up leaving that company and starting one area that you missed in that was No Limit Real Estate, which was really a brokerage that I owned for over 10 years with my best friend, Jordan Cohen. And we kind of, the No Limit Real Estate came twofold. The name came from, I was playing poker at the time, and I knew a lot of like the professional poker players and things like that. So the name kind of triggered from that. But also it was no limit in terms of we would kind of take on any assignment. We would go for the low-lying fruit like any new business owner would do. And through that process, I kind of touched every single aspect of the real estate industry. I had done everything from industrial sales to leasing to residential sales, high-end, low-end. And over that 10 years, I kind of got a really good grasp of it all. Towards the end of that and the beginning of Titn Development, me and my partner started doing some flips, if you will. We would, find underpriced property, renovate them, kind of more lipstick, changing flooring, maybe a kitchen, and selling it. And
Never really like foundational adjustments, more like cosmetic.
Exactly. It was almost like non-permitted work.
Yeah,
Right. The permit at that point, the permitting aspect of anything was kind of like a black cloud that we were scared. You know, everyone's like, it takes 6 months or a year for a permit, and it's a huge process. And if you can avoid that, you know, time is kind of money, especially in real estate, or really, you know, anything.
Yeah.
And we were able to get in and out of these properties quickly with makeup. And we did a couple of flips, and then I got a LinkedIn message, I believe, from a guy who I knew from high school. We weren't very close. He was a couple years older than me, Michael Govern, who's now my partner at Titn. So it's me, Jordan, and Michael. And he said, "Hey, Kyle, it looks like you guys are doing some investment stuff. I just left my job. I'm a general contractor, and I had a lot of success with my previous company, but I'm ready to kind of spread my own wings and have my own company as well. Let's like have lunch and just kind of shoot the shit and talk about how we might be able to do something together." So I'll never forget it. We went to Doc B's. We sat at the bar. And I thought I was just like 20-minute, like grab a beer and meet and greet.
Yeah.
And like 2 hours later, we're staring at each other, and we're like, "So what do we do? Like, how do we start? You know?" So we kind of said, instead of like formalizing a business, let's just find a deal.
Yeah.
So we both kind of went out there and started scouring for the right piece of land, and we ended up locating a piece just north of Auberge in Fort Lauderdale, and it was an old, rundown, single-family house that was actually being used as like not a rehab center, but like a group home type of ordeal, right by the beach, like 300 to 500 feet from the sand. And it was a single house on like a 12,000 square foot plus lot. And Mike said to me, "Look, this is perfect, and we can build 2 homes here." And I said, "Why can we build 2 homes here?" Like at this point, I'm like very raw.
Yeah.
He knows the development side of it. He's the contractor, but it's not, Mike's expertise isn't just building. We always say like it's easy once the permits are approved and you're going vertical. The front end of entitling it, getting the proper approvals is really where the secret sauce and, you know, almost the theoretical money's made. And he said, "Just trust me, it was originally platted as 2 lots. They build 1 house in the middle on both lots, and you have rights, you know, per the original plat, you know, to build, as long as it meets current zoning," right? So at this point, I'm like, okay, that sounds great, but, you know, he's like, "So we need to raise this much money, this is how much it's gonna cost to build." So I went out to a very close friend and client at the time, and the deal almost fell apart. But like hours before the end of due diligence, I thought it was like a pump and dump. Like we weren't gonna do it. And a good friend and client of mine came through, and he was like, "Hey, well, if it didn't work out, like send me the deal." And I said, "Look, man, we have like 3 hours left. Like I don't want to waste your time." And he's like, "I need 10 minutes to decide." So I sent him the deal, and he called me back, and he's like, "So what do you want?" And we went through like an arrangement of how we were going to split profits and things like that. And he said, "Okay, I'm in." And he like literally like, without him doing that, I really don't know whether the business would have taken off the way it did, because that project was right before COVID in an area that boomed.
Yeah.
The success on that project, like any business, leads to, you know, subsequent success.
Yeah.
You know, you gain confidence from people when you generate good returns for them, and then they usually want to put it back in.
For sure.
Right? So, but I'll never forget the discussion with Mike, because he's like, "Trust me, it can be replatted, and you know, we can plat it separately, and we can build 2 homes." And I'm like, "Look, man, I understand everything you're saying, and it's logical, but if we can't for some reason, like this is a very important person to me that I'm like getting this money from." And the realtor kept telling us, "If you're a developer and you're looking to build 2 homes here, just know you can't." You know, she's telling me this. It's like,
telling you this.
it's like Anne from Remax, you know, it's telling me you can't. And my buddy, who at this point I'm gaining a lot of respect for, is telling me I can. And I keep telling him, like, "She says we can't." And he's like, "She's an idiot. Like, we can, trust me." So we end up closing on the property, and literally 2 weeks later, Mike had it subdivided, 2 separate addresses through Broward County. We went through the plan development, and we built those houses in like record time, like 9 or 10 months.
Wow.
And I remember going home as they were getting finished, and this is when COVID like really, like we knew there was a problem. And I went home to my wife, and I was like, "I think we're fucked." Yeah, you know, I'll be honest with you. And she's like, "Why? Why do you say that?" I said, "Look what's happening.
Yeah.
I finally like took my shot, you know, and there's no economic activity, you know." And she's like, "Well, she's always been this way." And like, she's a big reason why I've been able to have success, when you have that kind of like backboard at home that keeps pushing you and says like, "We'll get through it." It helps you keep pushing forward and taking the shots that you need to. And then, a few weeks later, I came home and I was like, no, more money. You know what I mean? Like this went really, like, I think it's going to go the other direction. Like, everybody's moving here. You started to see the real estate market tick up, and then really like hockey puck, hockey stick.
Yeah.
And that project, we ended up selling both homes before they were completed. One was pretty much complete, the other one wasn't. And, had a lot of success. We returned almost like 100% return on equity to the investors.
Wow.
And then the funny thing about it was Mike, 6 months later, the guy who bought the house from us sold it for like $1 million more. So he made more money than the whole project just owning it for 6 months. And Mike said to me, he's like, look, this guy just bought it and sold it, and look how much effort we put in. And I said, well, he put $3 million down, to buy it and sell it. So we ended up picking up 2 more lots in the same neighborhood, did it again. So the first 2 lots, we paid $450,000 per door, or per lot. And then we paid $550,000, I believe. And now the cheapest lot in there is almost $2 million.
Jeez. Wow.
So, our general strategy is to, once a lot of development activity has their eyes on an area, we're kind of out of there. You have to find kind of the underserved or the area that you feel like hasn't performed as well as it should in a relative like geographic area, and locate those areas. And then once there's a lot of competition there, the land value is nothing that you can get below market anymore. And you have on the back end, when you deliver the product, there's competition, right? Like when you're spending millions of dollars on a house, if you want to be in this area and there's 1 or 2 to buy, well, then you're in great shape. But if all these developers are hiring all these great architects and like Las Olas Isles or some of these other areas, we wouldn't really touch those areas because,
they're already hot.
Yeah, and when you deliver the product and somebody's going to pay $10 or $12 million for a house, you don't want them to have 15, 10 or $12 million houses to look at. So, fast forward over the last few years, we've kind of kicked it up little by little, found our new little pockets. Now we're doing some more business out west because kind of the east side has become saturated a little bit. I believe that the Airbnb market, both low end and up to the high end, I mean, these multi-million-dollar houses were being Airbnb'd during COVID, has created, more supply out here than out there. Out there it's a need, right? Out here it's a want to some degree.
Totally.
And that's kind of been the business over the last 5 years. That it's stressful now. It's budget fighting. You're managing a lot more money, and I always say that I'm a kind of a gambler by nature, and this is like spec home building is like a real estate with a gambling component because the buyer's not lined up. But I'm a lot more comfortable gambling my own money than somebody else's.
Yeah.
So when you tell somebody else you're going to do something through this structure, if the budget starts to go too high, or you feel you might not sell the house for what you said you would, that's probably the biggest pressure that I feel.
So I guess backing up a little bit, No Limit, you guys did a bunch of different stuff. Now with Titn, you guys are pretty focused in on the type of projects that you're taking on. And it sounded like the shift to this like full scale development was pretty kind of like organic. You just met this guy and so on and so forth. Usually when I think of, a business that has like, you're kind of picking up like you said, the nature of the name No Limit almost makes me like, it's almost like a concerning approach because it's like, oh, you have no limit to what you guys are doing, which generally in business doesn't seem like the best strategy. But I'm assuming that the vast kind of experience you guys gained from that, like how was that sort of like the vast experience influential to when you started to focus more on like the type of projects you guys do with Titn? Like how did that impact? What kind of leg up would you say did that give you into
so funny enough with the name to start with, when we started the company, my friend Jordan's dad, who's like a marketing guy, was like, you don't start a sales company with the word no. Like, what are you doing? And I kind of like powered it through. And now looking back, if I were to open a new brokerage, I probably wouldn't call it No Limit, but I was a 20-something-year-old kid, and it was a cool name. And, I think really the relationships that I cultivated through the brokerage business are now a lot of the investors that trust me now with their money. So when you place people's money in certain investments and you say no, so this is kind of where the no, you know, in the real estate sales business, if somebody goes and buys something for a few $1,000,000, you could make a 6-figure commission. When you tell them not to buy something, you develop a lot of credibility because they know that you're negatively impacting your own pocket.
Yeah.
So through my career, I kind of really tried to stay as true as I could. I mean, we're all out there trying to make money for ourselves and our family. So it's a difficult thing to maneuver to some degree. But I would say no, you know, to like I've never been a guy that goes out and markets and finds new clients all the time. You know, the people that have worked with me would come back, be repeat customers. If they found something that they wanted to buy, they would call me and say, hey, I want to buy this, put in the offer. And allowing me to kind of put my hands on it and give them my advice was enough for them to allow me to receive the commission versus going and scouring and showing 10 options of what to buy. And then those same, you know, we have a little bit of a broader investment group now, but a lot of those clients ended up, you know, talking to a friend or family member about us. And that was crucial to kind of the book of people and the network that we have that are interested in what we do. And then as you have success, that grows and more people hear about it. And even now, you know, a broker that we work with that wanted to sell some properties for us out west said to me, hey, I have an investor, he'd love to invest in your deals. And my response was, you know, I don't really know him. You know, I don't kind of want him to just write a check. You know, I like the kind of boutique feeling of every single person that's invested with us is somebody I would go to dinner with, their friends or family. I think it helps me make good decisions for my company and the investors when I care about the people that are investing.
100%.
If you start just raising a bunch of money and it turns into like a machine for you, I think that's when people, you know, fail or go too far too fast. Or, you know, it's like right now I could probably raise several times more money than I need, right? And if I went and just raised money constantly and took it, well, then I have to place it somewhere. And that aggressive nature of trying to find the next project versus letting the next project come to you will create mistakes.
And so maybe on that, how do you, when it comes to identifying opportunities, how do you guys, like, take me through the sourcing process of like sourcing these new development opportunities?
So we, you know, at each kind of price point, and our goal is to get into some more like boutique commercial type of stuff, you know, in the near future. That's
But right now, a lot of it's spec homes.
Yeah, it's mostly residential, and we have a very good idea of, you know, what the final sale price needs to be relative to the per lot acquisition cost, you know, and then each product has a different cost to build. Like if we're building townhouses out on, you know, the west side of the railroad tracks, which is still a very nice area, River Oaks, and those areas, you're going to build call it a $200 per foot product. And if you're going to build a house that's going to sell for $5 or $10 million, it might be a $500+ per foot product. So you kind of get really good at the math in your head, and then when you have a feel for everything that's available, if most of the lots are selling, you know, if there's multiple lots for sale for 1.5 million, and you feel like you can get it for 900,000 or $1 million. We have a quick pro forma that we can run, and we're kind of targeting a certain return for the investors over what's usually a 2-year deal cycle. You know, we try to make it less. Obviously, we're building a custom home in 10 to 12 months. Our goal is always to get it built in under a year. Townhouses can take 8 or 9 months. We can do it even quicker. Again, we're a group of younger guys in somewhat of an antiquated silver-haired business, as we call it. So, you know, using computer systems, schedules, being very efficient with when the next vendor is teed up to go out there, purchasing the product on the front end. So we do a lot of planning, and then we go and execute. I think a lot of other developers, they walk into the house after the shell's built or the drywall's hung, and they're like, oh, we should have done that, let's change it. And we don't do a lot of changing, right? Like once we're in process, the designer has put their spec book and finished schedule together, and unless it's something that we know will certainly hinder the back end sale, we move forward with it, and then we learn from that experience, and on the next one, we'll change. Because time, I mean, we're in a 10, 11, 12% construction financing, you know, interest rate climate. So the changes that you're making that could delay you a few months, you could almost sell the house for less instead of making that change.
So, and this is something I've always thought through, is like there's so many different understanding some of the elements that goes into construction. There's so many different places that things can like go, that things can adjust and go wrong. It's kind of the nature of construction. So it to your point, like it sounds like does it seem like you guys put more emphasis on the planning phase than maybe you've seen like other developers go through? Is that an edge, would you say?
I think there's a little bit. I think there's an edge on the fact that we do it all in-house.
Okay.
So the general contractor being in-house and us managing the vendors ourselves is a huge efficiency and allows us to take projects on that I think others have to pass on. If I'm a developer and I'm going to develop plans, then go bid it out to contractors that are going to be on typically what we call a cost plus arrangement. There's a couple things happening there. One, the contractor doesn't have near the desire to get the project done in a shorter time. For their business, they should still want to get it done in a shorter time, but ultimately it's the gross dollars that are spent is what their fee is.
Yeah.
Right? So it's almost counterintuitive. It's like if I'm negotiating a piece of real estate for you, the more you pay, the bigger my commission is.
Right.
Well, it's the same thing in construction. If I hire a general contractor and they're going to go bid out 3 shell contractors or 3, drywall vendors, there are good people out there that are going to find the middle ground or help or really fight that budget to find the vendor that's hungry and will do it for a more affordable price, but they're not financially incentivized to. So us handling that portion of it, I think creates a time efficiency, and we're certainly building product at a lower cost than the average general contractor. That's without question. And we are doing some fee-based stuff now where we're building. You put your signs out there, people see houses go up really quick. They're beautiful at the end. Naturally, people call and say, "Hey, will you build this house for me?"
I see.
And we
Almost have you hire you guys specifically as just the GC
on that fee plus on that cost plus concept. And the reality of it is that our plus, we want to be higher than the market, but the gross dollars that you spend will be less. And the way that's kind of described is, on a custom home, you could have shell bids from, let's just call it $400,000 or $500,000 up to $800,000.
Wow.
If you go to one of the retail home builders in Fort Lauderdale, they're using one or two premier shell contractors. They're not really overly incentivized to negotiate with them, especially if they know that you're going to use them. And that spread becomes dramatic over the 50 or 75 contracts that you sign building these homes. I always say you don't add $1 million to the construction of a house at one time.
Yeah.
You add it $1,000, $5,000, $10,000 at a time, but 50 times. So that management of the budget and the timing and the schedule is kind of the secret sauce on the operation side, and I give Mike a lot of credit for that. That's really where his previous background in a production home building capacity, where it's like build 50 homes at the lowest cost possible in the lowest time. We've incorporated that into kind of my knowledge of the higher end market, and there's areas that really matter, and there's areas that it all matters in terms of engineering, safety, like the product being built in a very like quality way. But there's areas that you need to put more money into from a finish perspective than others. Like I always say, like nobody makes their decision whether to buy a house based on the bathroom floor, right, or the closet in the kids' bedroom. Right, your decision's made up well before as you walk through the house, right? The kitchen, the primary bedroom, primary bathroom. I'm conditioning myself. Those are the areas, the front elevation. There's areas that need to be finished in a way, but that decision's made. And anybody will overlook the tile in bathroom 4 if the rest of the house is like
what they're looking for.
What they're looking for.
Yeah. So, okay, 2 things come to my mind. One, the fact that there's, basically this element of vertical integration, if you will, with you guys. So there's less middlemanning, which generally means there's less margin that has to be created, which generally means then you can keep costs at a more controlled level, right? If another developer, like the GC has to make the money, the contractors have to make the money, but you guys can kind of fold it all into one. So be more aggressive in theory than other people, right? I guess on the, like when you're looking, because one of the things that you said, which I think is great, is you're not like you're not going. Your first step isn't like, let me raise money, figure out how to deploy it. You're like, let me find something great, and then let me go raise money.
Every time, yeah.
The finding something great, like you touched on it, that you're not trying to go into a market that's already hot. You're trying to catch it, like you want to be the standout property in that area.
Yeah.
So what is that like? What goes into that? What does that take actually to like really identify those opportunities?
So the reason why I haven't moved out of South Florida, other than loving it and kind of being very prideful of what happened, post-COVID, during COVID and post-COVID, now kind of has me anchored here forever.
Yeah.
I'm proud of what we did here. Being born and raised in this market, and we don't go down to Miami or really up to Palm Beach. I know a lot of the submarkets, and things make sense and other things don't make sense. In terms of, Harbor Inlet, if you will, which is where I live and where I built my home. The geographic location is amazing. Harbor Beach is right across the street at 10 times the average price point. There's no reason that it sits below, a Rio Vista or Victoria Park on an average home value, other than it just new homes haven't been built there, right? So now that market, we built our house, now there's 5 or 6 houses under construction in there. And I paid $575,000 for the lot that I built my home on, and the cheapest house in there is $1.3 million.
Wow.
So what you realize is that, geographic location is really what matters. Right. And then the areas where there aren't a lot of shovels in the ground, but make a lot of sense are kind of what we look for, So I think having an intimate knowledge of the little pockets down here, like that little beach community north of Auberge, right, was trading at maybe a 30 or 40% discount to Bayview, to Coral Ridge.
Wow.
Right? And Coral Ridge is west of the river. It's a beautiful family neighborhood. So everybody who has a family that wants to send their kids to Bayview Elementary, and there's a lot of probably the most families in Rio Vista and Coral Ridge in Fort Lauderdale. But when you really think about it logically, one's right next to the sand on the beach. It doesn't have the newer homes, and everything is not as clean there yet. But the nature of all of the land being developed in South Florida and things coming down and new things coming up are, based largely on geographic. So if you look at large scale developments, how Walmart looks at where they want to be,
sure,
they're not like, oh, well, the building next door is ugly.
Yeah.
They're like, where's the economic activity? Where's the right, bracket of what we're looking for? And I think on a small scale, we do something similar. There's not a science to it. It's a little bit more of an art and a feel.
Yeah.
And, I don't think it's gambling. I think it's kind of thoughtful shot taking, if you will.
Sure.
But yeah, that's really it. As I look at the overall market, Coral Ridge, Rio Vista, Victoria Park, there's new development everywhere. Not that we wouldn't do a deal in there, but I think it would be difficult for us to.
Yeah.
Because the developers are looking at similar pro formas, right? And if I look at the supply and the options available, I'm going to want a certain deal that somebody else will probably take on.
Yeah.
So, the markets that have been generally untouched but sit in close proximity or geographically are favorable is kind of what we look for. And those areas are running out, to be quite frank. When the interest rate climate starts to creep back down, that'll help residential, but it'll really help the commercial market. Commercial real estate is based purely on cash flows, right? So you want to build something that you can sell brand new for a 6 cap, right? Or let's call it a 15 times multiple-ish on the net income. But if you have to take debt out at 7 or 7.5, that's not really, you have to acquire it, you have to put 50% down and still not have great free cash flow.
Yeah.
So it doesn't make a lot of sense. Residential is a little bit more of a need, you need housing, right? And you can either rent it or you can buy it.
Yeah.
So I'd like to say it's holding up a little bit better, but there is a tipping point here. I mean, rates need to come down. Supply in Fort Lauderdale is exploding to some degree. Now the sellers aren't really giving in, and I talk about this a lot. They're like, why isn't this going to be 2008? And I think one of the things that people miss is that what creates big spiraling downturn is forced selling, right? Like in your business, right? When forced selling occurs, you don't have an option,
Right.
right? Right now, so in 2008 climate, people were putting 5% down on a house they couldn't afford, hoping to sell it for more in 6 months. When that didn't happen and the market didn't go up and it started going down, the holding costs weren't something that they could afford. Somebody making $100,000 a year was taking out $1 million loan. So they were purely speculating. This time around, you have a bunch of sellers. If they're selling, that took out 2.5 or 3% debt for their primary residence or a vacation home, and those are probably more aggressive than the primary homes. And they're putting them on the market at what the highest, most recent sale was, which they may not get. But the issue you have here is that a buyer's cost of acquiring the property is significantly higher than what the seller is paying. So there's like this stalemate where the seller says, come to my price, and the buyer says, I can't afford it. And the seller says, well, if you can't afford it, then I'm going to keep it. I'm going to rent it out, or I'll just live here until things change. Because if you're going to sell your house right now, you're going to give up a 2.5 to 3.5% mortgage to turn around and go take out a 6.5 or 7% mortgage. So so the sellers are in a very different position than the last time. So instead of having this like trickling downturn, you have like a huge decrease in activity, but honestly, prices on like a high level are still creeping up. You know.
So I guess for the South Florida, is that kind of your outlook on the market right now down here? Is like supply's exceeding demand, and I guess like where are you anticipating, especially maybe bringing in like, if I don't know if your perspective has changed since post-election, but thinking of like post-election and even the boom that happened during COVID and then where it's at now, like what's your outlook? And maybe a better question, what's your expectation on and what do you think investors should be aware of and where the direction of the market's going to be going here?
Yeah, so I think that the election result, purely from a financial perspective, gave people, there was like almost a clear uptick, in activity just like weeks after and months after. I do think that things would look differently even right now if it went the other way, purely financial, in a lot of ways, but purely financially. I think that rates need to come down. I think that the president knows that. I think we're kind of holding on, but it feels like you're kind of on the edge and holding. Again, I can't see a reason why, as long as unemployment stays low, I don't see a reason why the sellers are going to sell their low-priced mortgage in huge tranches, But I do see supply getting to a point to where if you actually want or need to sell your property, you're going to have to take less money. And once those prices do start dropping and that it does start moving, historically, it would tell you that it starts to accelerate to the downside. I think that rates get back somewhere with like a 5 handle, something in the mid to high 5s by the end of the year, let's say, and everything stabilizes and we're kind of in a decent spot. But I think if we stay in this like 7 range, which I'm obviously hoping, hoping against, I do see, prices coming down. Again, this is not, I don't have like data to show you. It's like, this is my feel based on looking at supply and demand every day, looking at what we do. Some of the challenges that you have in development, and usually when that stops, that's when you know as well, is that now you can't really speculate that you're going to sell the house for a record price anymore. But your cost of constructing and taking it through the process is still creeping up. So if that doesn't balance itself out, then economic development activity stops. There's a little bit more forced selling. But if people have jobs and they can pay their existing mortgage, I don't see a reason why you're going to fire sale your primary residence with a way, way, way below market interest rate.
Is there anything you guys do, or rather, how do you guys sort of mitigate some of the potential risks, like some of these things? For example, potential economic downturns, regulatory shifts, even going into like the potential supply chain volatility. Like, what do you guys, besides trying to stay ahead of and educated on where potentially things are going to go, is there anything else like I guess how are you guys mitigating those potential market risks?
So selectivity is a big thing.
Okay.
Now, it kind of goes back to that original thesis that, we want to have the one or two new construction, houses in a market where there's not a lot to offer.
Yeah.
I do think that the higher end market in markets without a lot of supply of new construction is probably safer. But a lot of people say to me, well, those people pay cash anyway, so the interest rate doesn't matter. And that's kind of that's a failed understanding of the financial markets, because the person who pays cash for a property has like a risk-free yield on the cash. So as that risk-free yield or whatever they're making, whether it's in the S&P or like a true like treasury bond, they're taking a return out of the market to go buy it. Whereas when you made nothing in a risk-free, like kind of way, that money was a lot easier to deploy, right? So right now, if you have tens of millions of dollars, well, you're making millions of dollars potentially per year with almost no risk, right? So to take that and put that into a piece of real estate actually is a decision, and those people are thoughtful. They got there, somehow.
Yeah.
And they're not just, now if they need it and their family wants their new beautiful home, but there's not as much like, I kind of want it and I have the money, so I'm going to go buy it, because, the money in the market is doing well, and you don't have to take a lot of risk to make a decent return now. So interest rates work twofold for the Mr. and Mrs. Smith that are buying their first home. It's an affordability issue for the wealthy group, which is kind of by default who we have to build for. They're still thoughtful about where interest rates are and the impact of utilizing that cash to buy a home or to buy a piece of real estate.
Yeah, and it's I actually love that you said selectivity, because even with our business, something we get asked a lot too is like, oh, like, the how are you guys planning to mitigate against how volatile the market is, and so on and so forth, and the nature of that comes down to, what are you actually buying? Like, what are you actually investing in, right? Like, and if you're investing in, we're value-based investors, right? So we're investing in things that oftentimes are relatively insulated from what's happening in the broader market. Like, people look at the market and they're like, they see, potential volatility, but there's a lot of pockets of the market, like the market's really big. And same with real estate, right? You may look at real estate, you may look at construction and see this big thing, but if you're diligencing something in the right way and you're finding, like you're saying, this piece of land that's in a part of this market that has not really hit its stride, then as long as you're buying properly, even with what's going on in the broader market, you're almost protected within the nature of how you're actually acquiring that property, right?
Yeah,
like
100%. And the reason why I like new construction versus like a residential flip, or what we were doing previous to starting Titn, is that, and this is why our investors are, keep shoveling money back into it, is that we're a lot of times 30 or 40% away from the market in terms of what our all-in is on a new construction build, versus like right now, if a house we project is going to be $10 million, we're probably going to be all in several $1 million less than that. Or at least that's our thesis. That's what we're looking for. So the risk reward proposition of our investments and what we do has a pretty nice cushion to the downside. If things stay flat, we expect 25 or 30%, cash on cash returns. These are leveraged returns, right? Yeah. So you're taking out debt on the construction financing. And then if things go the other direction, like they do in COVID, then everybody gets surprised to the upside. So I think that the risk that we have is somewhat mitigated through those efficiencies that we talked about at the beginning, and getting the property out and built at the most efficient and reasonable cost that we can. And yeah, I think that in this climate, being selective, and even with my own investments right now, I'm a little less bullish. Yeah. So I'm selective, and cash feels a little bit more important, and it goes back to those guys with a lot of money deploying it into a house. Is that the economic outlook is a little bit shaky. I'm confident overall. Yeah. I believe that 4 years from now, maybe not 4 months from now, But 4 years from now, we're going to look back and say the things that happened were favorable, and the market's going to be in a much higher place than it is now. But in my business and in the investment business, you have to be able to withstand those downturns, and really cash and liquidity is the only way to do it when you have certain expenses and you don't get paid a salary from another company.
Right.
You know, you kind of eat what you produce.
Yeah.
You know, so I think that's. But yeah, generally I'm positive on where things are going. I think that if rates went from 2.5 or 3% up to 7, held there for a year to 18 months, and we haven't seen like a big, falling off the cliff yet, then as they come back down, it's hard for me to logically see how that would be the time when that would happen.
Right. You mentioned on the cost side, what is there? Would you say there's some special sauce to like cost control and budgeting during development, or is it as simple as like once you have enough reps, you have the experience, like you have a good understanding of what range it's gonna fall into?
So it's negotiating, and you're selling yourself to some degree. A new vendor wants to get involved with you, and we're dealing with it now on a closet. The guy wants $50,000 for 2 closets, and we need to be at 40,000. And my purchaser in the office is like, well, there's this gap, and I said, well, you need to tell him that he's going to be able to place signage on one of the most valuable neighborhoods in Broward County, that we buy several $100,000 worth of closets a year, and that this is our first shot, and we have a vendor that we love, right? And that's a constant cycle of
negotiation,
finding new vendors, growing your vendor base, and selling yourself as somebody that has value to their company, so that they maybe take a 25% margin instead of 30. So it's really, we always say, building a really nice house at a good cost is not, or building a really nice house isn't always, doesn't always cost more money. It's more coordination and effort. So right now, structurally in our company, the operational aspects are what we're working the hardest on, is how information's flowing from the site back to the office, and from the office back to the site, and how, I can do what I just told you, but in order for us to build more projects, somebody else needs to that light needs to turn on, and instead of just being, hey, it's 50,000, before you even come to me and tell me that there's that 10,000 difference, have you done all these things?
Yeah.
So that's.
And is there, when it comes to take the closet, the closet contractor, for example, when it comes to choosing these different parties that you bring in, how do you guys how are you guys choosing? What are you looking for that's going to differentiate between somebody that's good versus someone that's great? Obviously, price is an element of it, but what's your kind of decision making process there?
So there's different aspects of the construction that are less and more important. So on a shell contractor or the person doing underground plumbing, that needs to be these need to be well-established vendors that are doing work in the area. Obviously you still want to get it for the best price possible, but those are structural integrity issues.
So their tenure maybe, or how long they've been doing is much bigger. You're less willing to gamble and take a risk on the.
And what are you building? Show me something. If a new shell contractor wanted to bid a project for us, it wouldn't be, well, oh, you've been in business in Miami for 20 years, so here, if you have the best bid, you're going to get it. I would want to walk a site of a custom home being built by them.
Very cool.
With my group. A lot of questions would be asked about their process, and what their where their workers experience comes from, and this and that. I mean, there's different elements, and then when you get to the finishing, there's all kinds of guys on Instagram doing wood paneling and all of this stuff, and part of our designer's job is to constantly source those new cool elements to houses that, quite frankly, you do often see on social media and stuff. Look what they did with the stairs, or look what they did with behind the TV.
Just getting ideas from that, yeah.
And then we'll reach out to those vendors. Again, we'll want to see physical product that they've completed, so we know it's not just a marketing ploy. But on that back end, as we get into more and more custom homes, it's important to kind of be ahead of the curve on those really unique elements to the homes. One of the biggest things that I talk about when demand kind of shrinks up a little bit is I think the natural instinct is to like keep your basis lower on the construction.
Sure.
But what we've learned through one project in Coral Ridge actually, which we kind of use that approach, was that when there aren't a lot of buyers, you want to make sure that when somebody comes to look at the house and then they leave, they feel like they're going to lose something if they don't buy yours.
The scarcity element.
Yeah, so it can't just be a 4,000 square foot house with decent tile everywhere
Yeah.
in a good community, because there's more of those,
Yeah.
right? But if they leave the house and they say like, man, that master suite, like what they did with the closet and like you know, the vanity wall or whatever the element is, the kitchen, you know,
Yeah.
these kind of things, they need to leave and they need to feel some emotion that there's a possibility of loss.
Yeah.
Right? And if the house is too, so that's where it gets really challenging, because demand has shrunk to some degree. And in order to make sure that you are the winning house to the demand that's there, you need to make it special.
Right.
To make it special costs money.
Yeah.
Right? So that's the problem.
To make it special, it needs to be unique. You can't just follow the herd either.
Yeah.
Right.
And that's the fine line that we're playing with in this market right now, is making it nice enough, knowing that there's not a lot of buyers out there. We want them to pick ours.
Yeah.
But then also knowing that typically making it nicer requires more money, and then you're bringing your basis up against, you know, a sale price that you're less confident in.
Yeah.
You know?
That's, yeah, I mean, at the end of the day with everything, right? People want people want to feel special. And that's why I always think the business models that it's like the scarcity kind of concept always really works, because if people feel like if they don't get it now, then they're going to miss out on something, versus like if they're walking and they're like, oh, these guys are just showing me another thing that like I can get somewhere else, then there's no like, it's like, it's not as sexy for them. It's not like,
It's not a pull.
right.
You know?
Exactly.
And that's the same thing about building the houses in the market where there aren't many, right? Is that, hey, if I don't buy this one new construction house that's in this, you know, Davie or Southwest Ranches, this area that I really want to live in, well, if it's sold, there's not another one coming behind it, right? I might have to go with my own architect and wait 2 years for it to be built, or whatever it may be. Whereas in, you know, Las Olas Isles, which I use as an example because there's just so much spec home development happening, is like if you walk into one and it's a $10 million house and you really like it, in 3 months there's another one that's going to be delivered and ready for you. So
is there any long-term risks that you see in sort of this traditional like in the traditional real estate development model, whether that's like I don't know, modular construction, some development with technology, is there any like long-term risk that you really kind
I
of
don't know if I'd call them risks as much as I'd call them like opportunities, you know. So we're super interested in that, like the 3D, like I was watching literally last night like a 3D computer building the shell, and it's just like it's going around with like a couple inches worth of concrete, and just layering it on top of each other. I think it's inconceivable. Like I think that has to come, right? I mean, just like any other technology, again, it's an industry that's kind of protected.
It's an old school,
yeah, and the barrier to entry maybe is a little bit higher. So it's and then there's like structural, like, you know, down here, the wind code and how you need to build a home, you know, the regulations of even using that are going to be a concern. You know, I think a lot of that stuff is going to start in areas that are built with sticks and bricks, as we say. So like, you know, if you go to areas that aren't in a high velocity wind zone, it's probably easier to test out those concepts than here, where, you know, every hurricane season you're at real risk of something coming. So it's not just convincing someone like me to give it an opportunity, because I would be all for it. You know, like you show me a 3D printer and you tell me you can build it anywhere close to, then I want to do it. But like, what's the city building department?
Yeah.
You know, so I think that I think this is where, and this is probably where this administration may really assist, is that the regulations, which I don't talk a lot about, but when it comes to those type of concepts, loosening the regulation to allow for innovation.
Yeah.
You know, I think I don't see it, based on the last 20 years of my life and having a phone where you push numbers in to one that me and you could have a communication across the world or send money to each other or whatever it may be. It's hard for me to imagine that those same concepts don't make their way into construction.
Right. Yeah.
You know?
And I think I like the way you answered it, because this like construction and contract work is even still to this day. I mean, Yeah, a lot of these businesses have good margin. They're a cost plus model, but and they know what they're doing from a labor standpoint, but the acceptance of the innovation is like usually, there's the resistance, right? Like in this blue collar space, but having the maybe not being the silver-haired people, you guys can be a little more like forward-thinking with it. And
Well, there's a little bit, but
yeah, there's a little.
but yeah, I think that this generation, I see it turning over. There's younger guys that are getting in to the construction business, and I think it's kind of inevitable that it comes. I don't know how or when.
Yeah.
Honestly, because like you said, you're bringing technology and innovation into really what's a blue-collar idea, whereas so far we've seen a lot of that growth on more of a white-collar financial side.
Couple last ones for you. Are there any companies or individuals in the space that you guys are either modeling after, or you guys like really admire and look to for inspiration, things of that nature?
I think we kind of like to say that we're doing it in a way that others should follow. I see a lot of people that have converted what we do into more of a fund or like a preferred return type of concept. And I think that goes back to the beginning of our talk, where I don't want to be forced into buying the next deal.
Yeah.
Right? If I have preferred returns and I need to, on a monthly basis, send out X, Y, or Z money, then it's very easy for it to quickly turn into your own little mini Ponzi scheme.
Yeah.
Where you have to find the next deal to fund the previous one. So the way we're set up is each deal is its own business, if you will. Each business has an operating agreement with a general partner and limited partner dynamic that's spelled out. It's very structured and similar to each. And there's no crossover from deal to deal. So if one deal's a failure, which knock on wood we haven't had yet, then the next deal can stand alone and be a success. There's definitely people in the market that we look at what they're building and we want to talk to their vendors or certain people. I mean, there's people doing really good things out here, but I don't think there's a lot of companies with our general structure and kind of the integrated
model
setup that we have. Yeah, the model that we have. But yeah, there's all kinds of people that we respect, from the vendors we use to other general contractors. I mean, there's retail contractors that build these custom homes out in Fort Lauderdale where we drive by and their sites are like you could eat off the floor.
Yeah.
And it's beautifully done.
Yeah.
It's not efficient for us because, again, we're actually fighting the budget. They have a multimillionaire that's paying the bills.
Yeah.
And so there's plenty of people that are doing a great job out there, but I'd like to think that our model is somewhat unique. And again, other than what I'm sharing here, I don't think a lot of people are getting around a table and being like, well, I do that.
Yeah.
There's not that many that I haven't really engaged
across it.
about how they're doing it differently.
Yeah.
A lot of people have told me to convert it, more into a fund where I raise money and then I go find deals. I like to find the deal and then raise the money. And so far that's worked. And if it's not broken, you don't fix it.
Sounds like a lot of the projects have been a success. Is there a least successful project you had, and something you learned, like a significant thing you learned from that?
So I just touched on that. There was a house in Coral Ridge that right as interest rates started rising, we were kind of in the middle stages of it. And it was, I mean, honestly, from a return perspective, it was still very good. It was less than we wanted. It was the only project that was less than what we proposed.
Got it.
But everybody was, still quite happy at the end. Yeah. But it was a situation where the house was, a 4,000-ish plus square foot house in Coral Ridge. And we were like, you know what? 4,000 square feet in Coral Ridge is going to get this price no matter what. We saw what was kind of happening, the writing on the wall. And we tried to get, through it quickly and not really do too many special elements. And it was just one of those deals where if we would have spent another 100,000, I think we would have gotten 500,000 more for the house, And then dynamics happened where you had it listed for, let's just say 3.75 million, and you got offered 3.3, and you said no, and then you actually got down to 3.25, and then the 3.3 guy wasn't there, right? And then we ended up selling it for like 2.9.
Oh wow! Yeah.
So we were listed at 3.7, had offers in the low to mid threes during that time. Thought there's no reason for us to take that. The comp showed that we should be able to get closer to this, and then had to kind of chase down a little bit.
Got it.
And that was that learning experience about, again, I think if we would have, put a fencing and gating system in the front and like a couple of wall elevations, it would have sold for a lot more money. But you get to the point to where, your budget's spent, the project's on the market, and the options are to go and bring in additional capital or go to the investors and say, hey, we want to put a couple $100,000 more into the house, or sell it for what it sells for. And again, that was still like, I don't know, I want to say a 35% or 40% cash on cash return for the investors, but I think they expected in the 50s, and the worst part about it is that we could have sold it in the 50s.
You had the potential.
So I guess that was like a greed a little bit, and getting a little ahead of ourselves, and we've learned from that now on our projects. If we're listed here and we get an offer, especially in this climate, that makes sense for the overall project, we're prepared to move forward. And I get a lot of pride in somebody buying a house from us and then 6 months or a year from now having their own equity. Like that first deal I told you about, where the guy was able to almost flip his new home for more. You're selling a house to a family. They're buying real estate to create equity for themselves. At some point, if not, they just rent, right? And as a developer, you want to get as much of that back end money in your pocket as possible, but not pushing it all the way to the end to where there's still some meat on the bone for the family that's looking to change their like the financial future for my family. I think that enters my mind a little bit. When somebody really loves the house and they have to have it for a little bit less, and I look at the pro forma and it works for us, we'll often make the deal.
You'll make the deal. I love that. Dude, it's been awesome. I have a couple last ones for you. Best piece of advice you've received in real estate?
Ooh, you might actually get me to stop talking. I guess I'll go with like more of a cliche, and it's probably kind of like from my wife. It's just to like, have confidence in yourself, be willing to take risks. We are not growing up in our age. We're not growing up in the same time frame that our parents did. So often, a lot of times, your parents will say, "This is the path you should take to get ahead," and things have changed dramatically. And if you still fit, like you at this point in world evolution, if you will, or the country's evolution, you either have to get lucky or take risks to get ahead financially. When our parents grew up, you could probably work your way up the corporate ladder, and get ahead. But those dynamics have changed, and I think that it's very important to believe in yourself, and everybody's risk tolerance is different. But if you're taking none, I really think you're missing an opportunity. Actually, this will be it. The biggest, I think I actually heard this online or something, is that the biggest risk that you can take as a young professional is not taking enough risks. Especially the younger you are, the more opportunity you have to recover. And I think it's very important and it's more fulfilling too. So like if you create something, you take risks, and it becomes successful for you, it's not just the money you make, it's the way it makes you feel.
100%. 100%. Is there anything else you're passionate about that you want to share with me or anybody that happens to listen to this?
I mean, for the most part, I always say it's real estate, family, and pickleball. Pickleball's a new habit of mine over the last year and a half or so that I've gotten super into. But 100%. We, as a family, spend a lot of time together. I coach my son's teams. He's a super athletic little kid. My daughter's into gymnastics. So because of my dad kind of losing his eyesight and losing the amount of time I had active with him, it's made me really think about my health, spending a lot of time with my kids and absorbing as much as I can. And then, being healthy for myself, pickleball, and then going out there and earning and giving them the life that they think they want.
That's the dream. And what are you most fired up about for over the next few quarters?
Rates coming down. I'd like to see rates coming down. We have some really, really fun projects that are, again, kind of the next step forward for us out on the west side. We're on a couple acre lots. We're building very large homes. And those are going to be exciting. We're bringing in really awesome professionals to work on it with us, from brokers to architects to the designers. So seeing all that come together will be super exciting. And then I would like towards the end of this year to find our next commercial project, assuming the rate climate's where it needs to be. We built the building that we operate in now.
Awesome.
So we have a retail tenant on the first floor. We operate on the second floor with a very good friend of mine, Rhett, who's my pickleball partner as well. And we operate on the second floor. There's a retail tenant on the first floor. That's probably my favorite development or investment we've ever done, is because every day I get to show up to work and actually use it.
Yeah.
Whereas we build these beautiful homes and then a few months later they're gone.
Yeah.
You know, so I think commercial real estate's the next step for us, and being able to kind of build wealth through maintaining ownership versus kind of flipping in and out of the residential stuff.
Hell yeah, man. This has been awesome. I appreciate the time, brother. Where can people find you, follow along with what you're doing, what Titn's doing?
So this is like my realm into the social media. This is me moving into the social media space. I do. One of my goals for this year is to get kind of an Instagram account more active and show our sites and put it in front of my face. And but Titn without the A, titndev.com is our website. You can find our number there if we can help you guys with any sort of fee-based stuff, or honestly just as a resource, feel free to call. And that's about it.
Awesome, man. Hell yeah. Appreciate your time, brother.
You got it.
I'll catch you, man.